Welcome back everyone to the Moneycontrol live stream. You're watching markets with Santo and CJ. Well, it seems like some bit of uncertainty has crept into the market. If you look at where we started off the day, it looked like we are going to probably inch towards the 18,300 mark. But Santo, at this point of time, we are closer to the 18,100 mark than the 300 mark. And although the market did fall into the negative territory for a brief while, there has been a little bit of a recovery and we have again come back into the positive zone, but still quite a way off from where the day's high lie. But the outperformance clearly is coming this session from the mid and small cap stocks. They are the ones that are outperforming their large cap peers. And concerningly for the bulls, Santo, the put call ratio, it has come down from about 1.1 to about 0.85 at this point of time in the session, and clearly indicating that retail investors out there are writing a lot of call options.
Well, but the chatter, if you speak to most of the dealers at broking firms, it is that more and more FIs are turning bullish on India. Now, in the past, usually whenever this talk about more FIs turning bullish on India gains momentum, that is typically the time when the market starts to crater a bit. So I only hope this time is slightly different.
Contraindicators galore.
Yeah, and that said, CJ, also there's some bit of pairing of positions given that tomorrow is a trading holiday,
Yeah,
so traders may not want to
carry long positions onto Thursday. Yeah, absolutely, absolutely.
And a quick check at the derivatives market, we're seeing build-up of short positions in futures of Vedanta, Marico, Divi's and Cholamandalam Investment. And we are seeing build-up of long positions in futures of Britannia, Bank of Baroda and Apollo Tyres.
Well, Santo, Divi's of course will be the talk of the town today. But before we get to Divi's, let's talk about the first stock that is on Santo's radar today.
Well, I'll start off with SRF. Good set of numbers from SRF, and the management commentary is also pretty positive, especially on the refrigerant gases segment where the order book is pretty strong, and it's also planning to launch a few products in the US very shortly. However, if you look at the sum of the parts, the chemical side of the business is doing well, and now it accounts for close to about 49% of the overall revenues. But you still have a good chunk of revenues at this point in time coming from the technical, textiles and packaging divisions, and that's where some bit of softness is being seen right now. Margins in both segments were much lower than what market was expecting, a huge miss in fact out there. So that led to the overall compression of close to about a few percentage points in the overall margin to about 21%. Now, according to Motilal Oswal, the outlook is positive, at least for the chemical side of the business, but at the same time valuations are quite rich at this point in time, and most of the good news appear to be already reflecting, and that's why, CJ, you're seeing the stock being trapped in some kind of a narrow range for the last couple of months now. It's not really gone past that peak it had seen sometime in April. I guess market is getting a little worried about valuations. Yes, it's a good story, but how much should one pay for it? That seems to be the question at this point.
Well, Santo, clearly valuation of course has been one concern, but I think a major chunk of the valuation re-rating that the stock had seen was also driven by the chemical business. And as far as the chemical business is concerned, the outlook there still remains quite strong, especially in the wake of the capex that the company is doing. Now, if you look at SRF in general, it has been part of the entire China plus one story. I mean, after the pandemic, a lot of investors have gotten on board SRF and some of the other specialty chemical companies on the hope that with a lot of multinational companies diversifying their supply chains, India will end up gaining a lot of market share in the export market from Chinese producers, and SRF being among the best out there. As far as specialty chemicals concerned, it will be among the major beneficiaries. So I think therefore in the long term, I don't think these sort of valuations will concern investors too much, especially those who have a longer term time horizon. Apart from that, as far as earnings growth is concerned, I think you could see earnings growth again come back to its strong momentum that we had seen earlier, probably before this margin compression started the past two quarters, largely also because the new capex that the company is doing, that will slowly and steadily start coming on stream, and you will start seeing an uptick as far as the specialty chemical volumes are concerned, as well as earnings, its contribution to the overall earnings growth. So for me, I think this is a very good story still. Yes, maybe in the near term you could see some profit booking, some bit of consolidation, but in the longer term, this is a stock to watch out for.
I mean, this is a point that we have discussed in the past also. All the chemical companies going in for capex at the same time is also not good news.
But I think probably, Santo, the fact is that they're only doing that capex because at this point of time, the demand outlook is, far outstripping the supply that is currently available. And as we know, supply always would be, a lag effect. It will always catch up to demand instead of demand, being very quickly be able to turn around and meet demand. So clearly, a lot of specialty chemical companies are very, very confident as far as demand is concerned, and therefore they have gone aggressively on the capex front. So let's see whether it turns out to be, according to the script, according to the plan of the companies or not. But at this point of time, at least that is the point of view that the market has. Well, the first stock on my radar today, and of course the stock of the day today, would be Divi's Laboratories. What a poor set of numbers the company has come out with, and you can see that in the reaction in the stock. The stock is down about 9% as we speak. Now Q2 net profit slumped about 19% on a year-on-year basis. Sales fell about 7%. So that itself is the biggest, has been one of the biggest triggers. The fact that the top line itself has contracted is something that a lot of people did not see coming as far as the performance is concerned. More than that, operating profits down about 24% on a year-on-year basis. Margins also shrank quite considerably, a couple of percentage points at least. So clearly, this has now become a derating story. Markets don't tend to have mercy when something like this, if you come out with these set of numbers, there is literally at this point of time no, light at the end of the tunnel. It seems as if the market is of that perception, and that is why you have seen the stock crater almost 10% in trade today, Santo.
Well, very hard to make a difference with that kind of numbers, CJ, and the stock reaction kind of says it all, that market clearly was not expecting this sharper decline in numbers, but I'll still try to make a case out there.
Please go ahead.
Well, if you look at the graph of the stock, the stock seems to be getting some kind of support around 3,500 level. This is where it had bounced back once a few months back, and again also at this point in time closer to around, I think, 3,480 odd. The stock seems to be finding some kind of a support. So if you look at a technical level, probably this is the, I would say, price point at which probably again you're seeing some kind of bargain hunters. And let's not forget, the stock has been underperforming for a while now. Most of the bad news, in fact, seems to be already priced in, but this number was still a shocker. And according to a Elara Capital report, this was a couple of months back, so Elara Capital analysts had pointed out that there's some bit of softness in its custom chemical synthesis business. That's where it's taking a bit of a beating, and some of it also coming off from a high base effect last year. But at the same time, generics is a big opportunity for Divi's Lab at this point in time. It is also investing a fair bit in capacity. Now, all that will come on stream only by next year. So this year, according to Elara, is likely to be quite muted, and which is what we have been seeing in the last couple of quarters earnings also. FY24 is when things will start turning around. Again, once again, those who have got a slightly longer term view on the stock might take a different stance.
Yeah, I mean, it seems FY23 will clearly be a washout, but I think, in the conference call with analysts, the company has tried to provide some bit of, a carrot to the market, in the sense of suggesting that margins will probably get better from here. You could
all
see
companies always say that.
Yeah, that is true, and you could see improvement in the custom synthesis business that you talked about clearly. And they overall said that the generic space, at least the outlook there remains quite robust. They have tried to sell it to the market. The market so far is not in the mood to buy it. We will have to wait and see whether you could see. I mean, when we open again for trade on Wednesday, you could see a rebound. That is very, very, very much natural. But at this point of time, Santo, given that the con call and the commentary has come within market hour, and the market is still not willing to buy it, suggests to me that this stock could be lined up for quite a bit of derating going ahead in the months to come.
It's very strange, CJ, in some ways. Typically, one of the common complaints that you hear is that there's no steep correction that is providing any buying opportunity. But at the same time, when you get those kind of sharp corrections, people don't really want to go in for.
True, because then suddenly the next question on your head is that maybe it could fall even more. So therefore, I think a lot of people keep waiting, and of course, none of us can ever call the bottom. I think that will always be a futile exercise as far as the market is concerned, or even the individual stock is concerned. But clearly, some might find value at these levels. As you mentioned, the resistance level has been very strong in the past as well. The support level has been very strong in the past as well. But we will have to wait and see if it breaks below that support. in the coming sessions and weeks.
Well, CJ, it was Peter Lynch who had famously remarked, predicting is a bit tough, especially when it's about the future. So
Absolutely.
nobody can call the bottom in that sense. TVS Motor Co, the next stock on our watch list. Now, good set of second quarter numbers there. CJ here is a big EV fan, and the numbers seem to be pretty much in line with what probably CJ would have been hoping for. But at the same time, it seems to be a mixed picture at this point in time, because the domestic demand picture remains pretty strong. However, there are some clouds of uncertainty over the export market, and brokerage house CLSA has rated the stock a sell with a price target of 932 rupees. But CLSA is among the very few brokerages which are bearish on TVS Motor Co at this point in time. Most of the analysts are positive, and the company has also performed well. But what CLSA has flagged is the expensive valuations, which then limit the upside in the stock from current levels. Already the stock has been range bound against CJ over the last month or so. Maybe it looks like the market is now, the stock has now factored in most of the positive developments. According to CLSA, it's quoting at about 30 times estimated FY24 earnings, which is slightly on the higher side.
I think, Santo, if you look at TVS, especially from the EV point of view, it has clearly been among the more successful EV stories in India in terms of market share. Also, it's been up and about there on par with Ola Electric. So clearly, the EV side of the business has been doing well. But the dichotomy is this that while EV adoption also increases, that also creates risk for the internal combustion engine based products that TVS sells. Now, the company would be betting that, of course, the growth rate in EV will be so huge that probably it will offset or more than offset the losses that they may see in the conventional products. That said, I think the valuations have been higher owing to the fact that market expects the EV side of the business to go very, very fast in the coming years and decades. So I think that is the reason why valuations have been high, and I think they will remain at these levels given the fact that there are not many listed players at this point of time who are on par with TVS Motors. Bajaj Auto is trying to come, is trying to catch up. Hero is also trying to catch up, but they have still not shown significant gains in terms of market share there. So we will have to wait and see what happens on that front. Also, I think if you look at the earnings trajectory, despite CLSA's sell rating, a lot of the analysts are still expecting more than 30% annualized growth in the earnings per share of the company over the next 3 to 4 years. So, I mean, even if the stock were to see a correction as it has seen today, I think as an investor, you would then question that why would I not want to buy 30% annualized growth in earnings for the next 3 to 4 years? Because at least the stock will compound by 30%, if not more, given the fact that EPS itself is growing, expected to grow at least by 30% going ahead. So it's a very interesting stock. I think it will be very interesting how the market reacts to any sort of sell-off. Whether we see bargain buying in the stock coming in would be very interesting to watch out for.
There goes CJ again with prediction. You can say for sure that it's going to compound at 30% year after year.
I'm not saying for sure. I'm saying that is what the street is expecting at this point of time. And let's see whether the street can mostly it's always wrong, but sometimes it gets the odd one right. So investors will be hoping of TVS Motors that the street gets it right this time.
Well, similar expectations, if you look at the international markets, investors seem to have similar expectations from the FANG stocks. They thought that the growth will be in perpetuity. In fact, all the conditions also seem to point towards that. But if you now look at the stocks, most of them, I think barring Apple, which is down 24% from its peak, the rest of the stocks are down almost 50% from their record highs.
Yeah, and that is, that is a hazard, occupational hazard.
That's how quickly sentiment changes. A couple of quarters of disappointing earnings and then the whole picture completely changes.
Absolutely. I take that point on, of course, as far as valuations are concerned, clearly market's point of view can change any time. That said, last stock on my radar today is Rategain Travel. Very strong set of numbers coming in from the company, clearly benefiting from the pent-up demand in the travel sector. Now, Rategain Travel provides, travel solution software to a lot of hospitality sector companies. You talk about travel agencies, you talk about hotels, everybody. I mean, Rategain has them as clients. So, if you look at the Q2 net profit, the company provided a net profit this quarter compared to a net loss last, in the year ago quarter, largely because year ago quarter was affected by COVID pandemic. Revenues jumped about 47% on a year-on-year basis. So clearly good performance there. Apart from that, going ahead, I think it will continue to, it will be interesting to see if it continues to benefit from the demand surge that a lot of people are expecting in travel. October to March is generally a travel season in India. Seasonally speaking, it should be a good next 6 months for Rategain. Apart from that, the company is generally also, if you look at the longer term story, it is a beneficiary of the digitalization that we are seeing in the hospitality sector. More and more, participants in the hospitality sector are adopting digital tech to improve efficiencies, to bring down costs, and of course, improve the customer service level or customer satisfaction levels as well. So this is one stock, I think, from a technology hospitality sector point of view, is a very interesting stock to look out for.
Well, yes, CJ, and considering that it has exposure to the travel and hospitality segment, again, it's hard to make a case against Rate Travel at this point in time, given that the travel and hospitality segment right now is going through a bullish phase at this point. But that said, I'm just looking at the price reaction now. The company's management was on the CNBC TV 18 channel a short while back, and it given a very positive outlook, and also said that the third quarter would be a really strong quarter, and the order book is also pretty robust at this point in time. But strangely, again, if you look at the market reaction of the stock, typically you would see that if the next quarter's earnings are going to be strong, typically market tends to factor that in advance. You're not seeing that. The stock has really not gone anywhere over the last 3 odd months. It's not been a big participant in the recent rally. So there is some kind of concern. I don't know what exactly the concern is about at this point, but the market simply doesn't seem to be buying the theory.
Possibly, Santo, and we'll have to wait and see. Maybe these set of earnings numbers might change the market's outlook on the stock going ahead. Clearly, the stock is up about 3% in today's trade, trading at the 292 to 293 level at this point of time, Santo. And your last stock, Santo?
Hero MotoCorp. Now, if you look at the two-wheeler segment in general, Hero MotoCorp clearly has been one of the laggards of 2022. So probably then it makes sense, if you're looking at to take exposure to any two-wheeler segment, and probably Hero MotoCorp may offer the safer odds, I would say.
And why do you say that?
Now, the company in its conference call had said that it's building a pipeline of premium products, and while its recently launched electric vehicle model is largely catering, it's an aspirational brand and in the premium segment, Vida that is, but at the same time it's also looking to build products for the affordable, mid and affordable segments as well. Again, the company is positive about recovery in rural sentiment. It's been pretty badly hit by the downturn in rural sentiment, and the management says that is now already they're seeing some kind of an improvement in rural sentiment, and the strong winter crop should work to the company's benefit, where demand once again for affordable motorcycles should go up. And besides that, the company also feels that at this point in time, maybe the worst of inflation and interest rate hikes may be behind, or at least if not behind, they are close to peaking out.
That's interesting, Santo, given that FMCG companies have given an exact opposite outlook on the rural economy, wherein they seem to be actually quite concerned the way things are at this point of time in the rural economy, and the impact inflation is having on rural wallets. Also, as far as interest rates are concerned, I don't think the true impact of higher interest rates has still been felt on the automobile sector. I mean, SBI on Saturday was indicating that they have still not seen any sort of impact from higher interest rates on credit demand. So clearly, it has not yet pinched the customer. But once that also starts pinching, it will be very interesting to see if, without rural demand recovery, if Hero can sustain any sort of recovery in volumes in the next 6 months. So therefore, my caveat with Hero remains the same. It is, as much as it may try to become a premium segment two-wheeler maker, it will still remain the mass market player. It is the kingpin as far as the mass market is concerned, and mass market at this point of time, as far as the two-wheeler industry is concerned, is going through some of the worst phase it has seen in the past 4 to 5 years. So I'm still not convinced by Hero Moto's story. Yes, the management has been talking a lot of good things. The market also has been expecting a lot of good things. But as far as evidence is concerned, I have seen little to convince myself that things are looking up.
Well, and with that, a quick check on the markets at this point. A dramatic recovery in the Nifty and Sensex. The Nifty is now up by close to about 86 points and is holding comfortably above the 18,200 mark. The Sensex is up by about 242 points. So that theory actually of traders wanting to pair their position doesn't really seem to be working.
No, yeah, but Santo, crucially, if you look at it, we have still not crossed above the 18,220 mark, which was the holy grail as far as resistance level is concerned for technical analysts. They were very, assertive in the fact that the market has to close above the 18,220 mark on a closing basis to indicate that there could be more long positions going ahead. So clearly, as we have just 10 minutes left for the end of the day's trade, if the market can, of course, this momentum continues and we can blow past 220 on the Nifty, that would be great for this as far as setup is concerned for Thursday. But if we don't, then some doubts may creep in, especially if we do not have a great session on Wall Street tonight and tomorrow. So I think it still remains a little dicey as far as incremental positioning is concerned in the market. But as far as the short to medium term positioning concerned, clearly at this point of time, it is in the favor of people who are willing to buy the dip or are holding on to long positions in this market.
Well, CJ, you just made a point about Wall Street and its sentiment on its influence, but I don't think so that seems to be the case any longer. Irrespective of what US markets do, we always seem
at least the correlation has weakened. I would not say that it's not entirely correlated, but clearly the correlation has weakened in recent sessions. That said, Santo, let's quickly take a look at some of the comments that have been coming and the thought process that has been coming from our viewers. And one of our viewers, I think, wanted to have our thoughts on Relaxo footwear. Clearly, the September quarter earnings from the company was not really much to write home about. There was not much indication in terms of volume growth, in terms of margins as well. The company was facing pressure on the margin front. But I think one of the reasons why Vinayak Relaxo footwear probably has been seeing a little bit of negativity from the market is the fact that it's also a mass market product. It largely caters to the lower strata of the society, the lower entry level segment, and there, as we mentioned, for two-wheelers, demand at this point of time is a major concern, and that is probably one of the reasons why we have seen the market react so adversely to the company's weak numbers for the second quarter. That said, the company itself has been trying to redirect its strategy towards premium products, because clearly that is where the demand lies at this point of time. Whether it will be able to do that successfully and in time to be re-rated by the market remains to be seen. But the hope would be that we can see a very strong recovery in the rural market post the winter season crop, winter crop season, and therefore a revival in volumes as well. And well, Santo, I think that is about it for today.
Well, and what are we keeping an eye out for?
Not much. Earnings? I think it's a very light, upcoming 2-3 days. But I think mostly earnings would be the one to watch out for. Tata Motors will be coming out with its earnings later today, so the market will be reacting to that. Apart from that, tomorrow Jubilant FoodWorks and Dr. Lal Path Labs will be coming out with their earnings. So some key names to watch out for as far as earnings are concerned, to which the market will be reacting on Wednesday morning. That said, apart from that, tomorrow watch out for a speech from US Fed's member Meister. She'll be speaking about the monetary policy, post policy. She'll be the first speaker to speak about it. So it'll be very interesting to see what thoughts the US Fed has, or the US Fed member has, as far as interest rates are concerned, as far as the session is concerned going ahead.
Well, and with that we wrap up this episode of Market with Santo and CJ. There will be no market show tomorrow because it's a trading holiday, and we'll be back again on Wednesday morning. Thanks for watching and also sending in your feedback.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of the financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live Wednesday morning at 9 a.m. Till then, have a great day.